Greetings from Geojit Financial Services. As we enter a decisive period for the Indian markets, we have the latest IPO in the form of a small cap IT services company, Happiest Technologies Limited. The issue runs from September 7th to September 9th and includes a fresh issue amounting to 110 crores and also an offer for sale by the promoters and the investor. The early investor is looking to exit its stake at a huge profit. Let's look at the financials of the company. Though the company registered a net loss in FY18, it bounced back to net profits in FY19, FY20 and also in the latest quarter, along with improving margins. The product verticals of the company should ensure that it keeps up with these performances in the future. Let's look at what's working for this company's IPO. The company has generated around 316 crores from around 25 anchor investors. These investors include sovereign wealth funds, hedge funds, domestic mutual funds, and also insurance companies. The confidence of these investors bodes well for the IPO's prospects. The second reason is the growth potential of the company. HMTL's potential is very simple: a digital services company in a post-COVID-19 scenario. When companies are undergoing digital transformation to increase their productivity, to increase efficiency, to minimize human errors and to automate, HMTL's products are well placed to cater to this requirement. The third reason to invest in this IPO is the management pedigree and the promoter track record. Ashok Soota, who heads this company, has already proved his credibility as head of Mindtree Limited when it led the company through its successful IPO run. He is also well regarded in the industry. The fourth reason is with respect to the business that is being generated by the company. 76% of the business has been generated from sectors that have been less impacted from the pandemic. Now, this gives earnings stability and also a small benefit from the pent-up demand that is expected to occur in the next few quarters. Let's also look at the concerns that this IPO has. Geographic revenue diversification is a concern because North America the profit that is generated from North America is close to 78% of the business. Client diversification is also a small concern because the top 10 clients account for 48% of the revenues. But the company seems to be handling these risks by expanding its business operations and the client database, especially in Europe, Australia and the Middle East. The primary concern regarding this IPO is the valuations of the company. In FY20 basis, the PE comes to around 34 times. But the latest Q1 numbers and analyzing it, we get an FY21 PE of around 12 times, which is actually much more moderate and seems attractive. So overall, when you look at it, the growth potential of this digital services company trumps all the other concerns ahead of its IPO. We recommend a subscribe rating on Happiest Technologies Limited for the aggressive investor with a long-term perspective. Please note that the retail portion of this issue is limited to just 10%, so it is likely to be oversubscribed. Thank you and happy investing.